Okay, the delta trap signal. Now this is a 3-bar pattern signal, and what it's doing is trying to identify trap traders that are on the wrong side of the market and then are forced to cover. So our rules: in a downtrend, a green bar with strong positive delta followed by 2 red bars with negative delta, which together cancel out the positive delta, and then we have a gap, a value area gap on the last bar. Right now, this would be in a downtrend, and obviously just the exact opposite in an uptrend. And so here's a decent example of it. You see with the 3 bars here, the idea is as we start to push back, we've got trap traders down here at the lows. A little easier, I think, to see it on the chart. So here, this is a decent example. This is Wednesday, I think, as well. Okay, so here's the signal right here. It gets a gray stripe. So very obvious uptrend, right? Just higher highs, higher low, all the way. Now we get this little two. Well, let's call it an ABC or a second entry, a 2-legged swing lower. So the thought is, and the reason you have potential traders here is that this big bar down here, we've had a lot of aggressive selling. As we bring it over here and I open it up a little bit. So you've been in this uptrend here. The market goes into a little bit of rotation. Then you get a big drive here with very aggressive selling. Let me open this up a little bit so we can see it better. So you see after that raging uptrend, we get a big push here with substantial size down here. Now it takes a couple of bars for the market to adjust to this, the uptrend, then the downtrend. So this is the bar where we potentially have, arrow here, we have trap traders right here. Now it doesn't launch immediately, but as we go through this rotation, then we start to get the push up, and then the idea is that these guys would be on the wrong side of the market and are forced to cover, and that's part of what drives the market higher. So it's what you're trying to do is identify where you have trap traders that are going to need to cover, and that will add some fuel to the upside. So this is a decent example of it, although again it's a 3-bar pattern, but we don't necessarily, you're not immediately looking for the launch on the following bar, and this being a good example of that. But clearly you've got people that went aggressively short here, and as the market pushes back, now the positive delta here is offsetting all the negative delta here, and then that's why as we start to push higher, then we get, you'll note here, we get the value area gaps as the market shows that strength. Right, delta trap. These are much more common. Again, not necessarily see it and then buy at the market, but heads up, right? Potentially you've got trap traders, so you'd want to look and see if you can identify that, and then, you know, whatever your entry rules may be, you might look for break of structure or some sort of indication here that you want to get long as these guys are forced to cover, and then kind of putting it in context, you can see why you'd be looking to get back on the long side. All right, trap traders, that's a good one. Keep an eye out for that one.